Is the Miami housing market on the precipice of collapse in 2024? Well, the answer to that question depends on where you look. With home prices in Miami much more likely to go down in these areas in red than these areas in blue. That's because huge differences are cropping up across the Miami housing market. In some areas, inventory has exploded and sellers are cutting the price, but in other locations, we're still in a massive housing bubble. With the typical price of a home across the Miami-Fort Lauderdale metro measuring $473,000 in early 2024. Now, to be clear, that's the typical price of a home and includes condos. You can see that this price is approximately 33% higher than what it was before the pandemic and is way higher than the peak of the '07 bubble before the last big crash. And the sad reality for a lot of home buyers and renters in Miami is that they're getting completely priced out of the market over the last couple years. I mean, if you live in Miami, chances are you cannot afford the current prices in the market, especially at today's mortgage rates. For instance, if we go here on Zillow and zoom in on a neighborhood like Pembroke Pines, you can see a standard house costs about $740,000, which would run you an approximate $4,700 a month payment for your mortgage, insurance, and property taxes. $4,700 a month is nearly $60,000 a year when the median household income in the Miami metro is barely above $70,000. That's right, everyone. Miami, despite a lot of wealth appearing in some of the nicer neighborhoods, is still a very working class area in Southeast Florida. A lot of the economy runs off service jobs. A lot of the economy runs off immigration. And as a result, people there don't actually have the money to afford these sky-high prices, which has me thinking that this market is in a bubble that could come crashing down. With home prices in Miami-Dade County about 26% overvalued from historical norms, in Broward County they're 40% overvalued, and in Palm Beach County they're 34% overvalued. And the way we calculate overvaluation rate here at Reventure app is we look at the historical relationship of home prices and incomes in an area and then determine what the fair home value is based on that relationship. And you can see today in Palm Beach County we're 34% overvalued, whereas we were fairly valued before the pandemic and significantly undervalued after the last crash. And so if you're a home buyer and investor, you'd probably rather buy into the market when it's undervalued or fairly valued compared to being significantly overvalued. Because when it's very overvalued, that means there's huge downside risk, and it also means you're probably not going to see a ton of future appreciation. However, everyone, housing markets, especially in Southeast Florida, they can be overvalued for a long time. Just because things are really, really expensive doesn't mean that they're going to crash tomorrow. And one of the most important data points that you should look at, whether you're a realtor or an investor or a home buyer, is the level of inventory on the housing market in your local area. Because the level of inventory, that's going to tell you what's happening in real time in the market. It's going to tell you what might happen with prices over the next 6 to 12 months in the short term. And the thing with Miami is that despite the fact that it's overvalued and no one can afford the homes there, we're still seeing fairly low inventory levels. For instance, you can see that the inventory levels in Miami-Dade County are about 20% below their long-term norms. This is a data point on Reventure app called inventory surplus or deficit. And it takes a look at where inventory levels are today compared to where they are normally. And you can see that, before the pandemic, inventory in Miami was very, very high. It was 47% above normal. It's actually a buyer's market in Miami. Back here, you can see it's still a seller's market in 2024, although it's getting a little bit better. You can see that Miami's low inventory levels stand in stark contrast to many other parts of Florida, particularly on the western coast and in central Florida, where inventory has surged. In Osceola County, Polk County, Sarasota County, lots of inventory here, but we still have fairly low inventory in Miami, particularly in some of these zip codes in blue, everyone. We're now looking at the different zip codes and neighborhoods in Miami, something that you guys really need to do if you're a home buyer and investor to better understand what's going on. You can see here in Coral Gables, inventory is 37% lower than long-term norms, meaning there's a shortage in Coral Gables. We don't have enough homes on the market. If you go down to Kendall, inventory is 30% below the long-term norms, again, meaning that there's a shortage. And so these neighborhoods in blue, there's still a big shortage, meaning that it's going to take longer for prices to correct. However, the amazing thing about the Miami housing market right now, as well as the housing market, in most cities across America, is that we have a very bifurcated market. You have certain neighborhoods which are still tight, which have a shortage where prices are still going up, but then you have other neighborhoods where it's flipped. Other neighborhoods where the sellers are rushing to get out, where the investors are selling, where there's foreclosures, where the inventory spiked and the prices have started to drop. One area that would be like this in Miami would be the area of Wynwood. You can see in Wynwood and Buena Vista, inventory is 46% above normal. There's 122 homes available for sale today, a level which is just astronomically higher than what we've seen the last 7 to 8 years. So when the inventory goes up like this, it's telling you the market has entered a downturn. There's fewer buyers, there's more sellers, and you can expect that prices are more likely to drop, which is why the Reventure app home price forecast score in Wynwood is saying prices down. However, in a market like Coral Gables, it's saying prices are up and that we're still in a big seller's market. However, I think in general, Miami's housing market is going to have some problems going forward. Whether we're in Kendall or whether we're in Wynwood, I'm seeing a slowdown when I look at the data overall. There's fewer people moving into Miami now that the pandemic is over. There's more people moving out. We have an increase in evictions. We have an increase in mortgage defaults. There's lots of things going on right now in Miami's housing market that suggest there'll be problems ahead. For example, the Wall Street Journal just ran an article talking about Miami's office market, saying it was red hot, but now its tallest tower can't fill its space. With the challenges swirling around a skyscraper known as One Brickell City Center, showing how the city's once sizzling hot office market is starting to cool. With New York developer-related companies and Swire Properties struggling to find an anchor tenant roughly a year after the groundbreaking of the property. As a result, they're considering actually selling the site before it gets completed, with a big slowdown in new market leasing activity. According to JLL, leasing activity in the Miami office market was down 25% from 2022, with sublease vacancies increasing 66% through the end of the year, a sign that existing tenants want to cut back on space. And so Miami's office market is having problems, which suggests its economy is slowing, which suggests the boom of corporate relocations has slowed down, which is very important for you guys to know as a buyer, investor, or realtor, because I still see a lot of people out there in Miami and other parts of the country. They still say things like, all the companies are moving in, all the corporations are moving in, all the people are moving here. Like, that's not really happening in the same way it was 2 years ago. It's just not. And the data is showing that. And so, knowing that that slowdown in demand is happening, it's realistic to expect that the local housing market's going to correct because the locals in a city like Miami just can't afford it. With the median household income in Miami-Dade County registering only $71,000 per year, folks. That's right. $71,000 for the typical family in Miami. You can see that this number has gone up in recent years. However, it's still at a level that's just not high enough compared to the levels of home prices and rents. And in particular, in terms of rent, renters in Miami are having to pay nearly 45% of their median income on apartment rent. I mean, that's crazy, folks. That actually makes Miami-Dade County, along with Broward County, the fourth and fifth most expensive markets to rent an apartment or a house in America relative to local incomes, which suggests that many of the tenants in Miami are getting squeezed. So if you're a real estate investor buying in Miami or operating properties in Miami and rentals, it's really important to look at the income levels of your tenants, because I suspect by that data that there's a lot of tenants in Miami who are barely scraping by and able to afford their rent. I would not be surprised if we see a big uptick in evictions going forward. You can see data from Eviction Lab shows that the eviction rates in Miami have spiked up from their pandemic levels and are now above the pre-pandemic average. So we already have an increase in evictions in Miami, likely to have more going forward. And ultimately, I'm not trying to be too negative, everyone. I think Miami is a really cool place. I spend a lot of time there. I would actually love to have a place there at some point. However, there's just lots of risk factors in this housing market that you need to pay attention to if you're a home buyer and investor. And so what I would encourage you guys to do, so you can make a more informed decision and do some good research, is go to www.reventure.app and type in Miami into the search and immediately start looking at data on the Miami-Fort Lauderdale, Palm Beach housing market. And you can look at, the differences in price and affordability. You can look at the differences in inventory levels. But really what you're going to want to do is start looking at data points like inventory, surplus, and deficit. This is one that's going to give you key insights into whether your neighborhood is likely to experience decreasing or increasing prices in next year. You're going to also want to take a look at the Reventure app home price forecast score for your neighborhood. This is a score going from 0 to 100, attempting to project where prices are likely to head over the next 12 months based on factors like recent appreciation, days on the market, mortgage rates, inventory, and price cuts. So you can see whether we're in a buyer's market like before the pandemic or in a seller's market. And ultimately, folks, if you want to make an educated decision, you have to use data like this, Because if you don't, you're basically taking a shot in the dark, and ultimately that's not enough when there's such huge differences going on in different neighborhoods and cities. And so head to Reventure app and sign up for a premium plan. The cost is $39 a month. This is a monthly plan which renews each month, and you can cancel it at any time once you've done the research that you want to do. And get prepared for even more of these housing market deep dives in future weeks here on the Reventure Market Report YouTube channel.